Hello, today is Wednesday the 30th of August, and later today we have got a blue moon, full moon, super moon. Quite often the market moves around moon cycles, as you know, everyone looks at that. I actually think perhaps maybe later this week, Friday, with non-farm payrolls and the jobs numbers, that's going to be a bigger mover. For now, though, we're at some really interesting levels and seeing some really interesting moves. First off, let's talk about this dollar. Now, I know quite often when I talk about a three-wave correction, so if we are in an uptrend and we see a correction and a normal correction, three waves would look like that, and we keep going, and then sometimes they go sideways like this, and then you keep going. And I have a kind of feeling that that's what we've just done in the dollar. So if we were going to do it the other way and a downtrend, like this, and sometimes they run a bit, so we end up like this, but there's still a correction. And one of the key tells that that's what's going on is if these two swings are equal before you carry on lower. So if this swing and this swing, and that's kind of where we are with the dollar. And yeah, what happens big picture with the dollar does matter. So at the moment, when we look at these weekly moving averages, we're kind of going flat. Look, this weekly 200 is flat. These daily 200 are bunching up and flattening out. So we're kind of a bit like where we were in 2019, which way next? And so that's how I'm seeing this. But if I measure these swings, like this, so if I measure from this low to this high, project it from here, it's not quite equal, but it's pretty close. And so when you look at this, you say, well, that's what we will have done if we go back underneath this 61.8 level, which is at 102.70, which is also where the weekly 20 moving average is. So at the moment, it's looking like a bearish harami. We still haven't even got close to non-farm payrolls, have we? So that's what I'm looking at the dollar, and I think that this three-wave correction, that we've had a move up, three waves down, and then I think that we will continue to new lows if we continue underneath 102.70, and that for me is where the support is in this dollar index as well. That's a big deal, because if the dollar has topped and is going to make another swing lower, that's a really good news for commodity prices. And there are some really interesting ones out there, like gold and silver and metals. Uranium I talked about last week. I think there's a really cool opportunity in uranium stocks to following it higher. So we've got a lot going on, haven't we? Let's take a look at the Eurodollar, which of course is the biggest component of the dollar index, and see what we're seeing. Because in the Eurodollar, if we look at our weekly here, we have got this channel, and potentially this was a three-wave correction inverse to the one we just looked at in the dollar. So if this swing and this swing are equal, it could be one of those running flat corrections. So like a normal one look like this potentially, but it could be like this. And so it looks like we haven't even made a correction, just pullbacks in the uptrend. So if we measure the same thing here in this Eurodollar high to low here, again, in the euro, we're a little bit closer to that equal measured move price. So, maybe we get retested. We are bunched up in between these moving averages, but it's got that look. And so for me, that key correction level that we need to get above, if we finish this correction and we're going to start a big wave three, and a big wave three would be a big deal, is 109.56. So if we continue higher with this bullish reversal that we're seeing in the Eurodollar, 109.56 is the upside target. If we look at this, that's all going to put us back around this. This is what we need to close and hold above. That's going to put us above this previous swing high and back towards the 50 moving average. So potentially this whole corrective thing is over in the Eurodollar. Maybe we get an early warning if I put my fibs on, like high to low, if we get above this 236 fib. And if we use fibs, we could say, we can make it quite simple, move this up to the 38.2. If we can hold above this 236 fib level here in the euro dollar, which is also interesting support and resistance, it's at 1.0886. Our next upside target is 1.096, and that gives us an interesting swing trade. It's not a good looking head and shoulders pattern, is it? But we can see where 1.0886 our key level is, and of course that's yesterday's swing high. It's not weird to make a three-wave correction here, so I wouldn't be surprised if we pull back in a little bit of a sideways consolidation range, and we do a little bit of this ahead of the payrolls. That wouldn't be a surprise at all, but that's the key level, and that's the short-term trade idea. And beyond there, obviously, you know, we've got, if we get above that 1.096, that 1.088 level that we talked about, then potentially we've got a much bigger kind of move higher going on, and I would jump in. So we can apply that to quite a lot of the other dollar pairs as well. Let's take a look at the pound. So big picture in the pound, we got knocked back at quite interesting weekly levels. If we go out to the monthly in the pound, as you know, I think this is a really big deal level we've been kind of going back and forward at, because it's from this big swing high, we're at, I've got this the wrong way around, let's put it this way, pop some regular, switch back to regular candles. And here we are sideways, big 236 fib level, monthly 50 moving average. That's the level that we got rejected at, but a monthly close above 1.286 would be bullish. No sign of it at the moment, but we are starting to turn up again. Maybe this was just a correction. So when we look at this here on the weekly, you can see the weekly 200 moving averages here. That's the same as the monthly 50 moving average. And when we look at this on the daily, that's going to be the level I think that we need to get above, and it would be probably 50% of this swing. So we get above that level. Yes, it is 50%. So we get above that level, we're going to retest the highs and potentially another swing higher. I can't see that kind of same corrective thing going on here in the pound, but you know, high tide floats all the boats, as they say. And in the dollar Canadian, which is the other one we were looking at, the long side on the daily, we unfortunately, with yesterday's reversal, we've made a double top at this big 61.8 fib level. Now, when you have what you think is a big ABC, which is what we've got here, 1, 2, 3, you put your fib retraces over both swings, over what you think the whole correction is. It's been a bit messy at these other fib levels, but you know that a reversal at a 61.8 has a pivot level in the middle at the 50%, so that's 1.35. So underneath 1.3534, we're going lower. Our trade target therefore would be 1.343. So, and we get that bigger, you know, 61.8, 38.2 golden ratio zone. These are the levels I'm watching going into month end. And I think, therefore, we've got further to fall in the dollar here. Most of these other charts say we've got further to go, a little bit further to go in this dollar move. And quite exciting. Let's take a look at the yen crosses, because that would normally mean a little bit of a pullback in the dollar yen. And that's what we got yesterday. Really false breakouts. So false breakouts. We had this sideways trading range that we've been in since the middle of August. Yesterday we tried to break out, hit our upside target at 147, and it was a false breakout. I think potentially, therefore, we could come back with month end back to the bottom of this sideways range, and we can look at these range highs. So back towards 145 and potentially a little bit lower, 144.64. And if that's the truth, then these closing prices and this previous swing high should hold as resistance for a sell for another swing lower in the dollar yen. And that's kind of where we are at if we look at this short term there for month end. Remember, you often see reversal flows going into month end. So I'm looking for another swing lower because it's not quite clear that this is three waves. But yes, I'm looking for a sell scenario to sell the dollar yen for another swing lower in FX and back to the bottom of this sideways range as we go into month end. Could get volatile on Friday with non-farm payrolls, but that's what I'm looking for. And today, of course, we have the core PCE. That doesn't that's a measure of inflation. That's about an hour and 15 minutes from now as I'm recording this. That doesn't normally differ, but it could, and that's the biggest news event for dollar yen. So 1 hour before the US Open, 1:30 UK time, 8:30 New York time, we have that inflation data for the US, and I think my favorite trade setup is going to be this dollar yen. And you can see if we measure this first swing lower and we project it from here, that would very nicely put us back to the bottom of this range. So that's otherwise, if we break out, obviously we've got a nice upside target, 147.93. So that's how I'm seeing FX pairs, and most of the other FX pairs are kind of moving in line with dollar yen. One that is quite interesting, if we have bottomed in the dollar, for a little while anyway, is potentially we've got a nice breakout here in the Kiwi yen. So on the 4 hour in the Kiwi yen, I'm just going to pop regular candles on, we're at a pretty important decision level. It's a pretty clear all the way back from this high support and resistance level here at 87. And if I measure from this swing low, if we're going to be bearish and if I'm wrong about the dollar, then we're fast approaching 87.31 equal measured move level. If we reverse there, so if we reverse at this equal measured move level and we then drop back underneath 86.86, that would mean this whole move is corrective. We would be going and another swing lower. If we can hold above this level, I think buying pullbacks and this whole correction will be over. And then we're going to be going A, B, C and measuring our zigzag that way. So Kiwi yen, don't see a big, I see a big decision as to whether we've bottomed or not in the yen cross for this one. And for most of the others as well. Okay, let's take a look at metals and oil. So first off in silver, as you know, I'm going to talk about this another time, but there's the biggest head and shoulders you ever saw in the gold-silver ratio, which does point to silver going forward outperforming gold. And when I look at this regular chart here, we could argue that this pullback in silver is a continuation head and shoulders patterns, couldn't we? And it's also, if we measure from the highs that we made in January 2021, there's a lot of reasons to like silver. A textbook equal measured move, look, 1, 2, 3 equal. So trading back above this 61.8 confirmed it. I feel like this on a smaller scale here is a correction that we've just done, and I'm looking for this to break out. And so what the dollar does, because silver is quite sensitive to the dollar, I don't expect to break out today. Third touches are very often kind of false breakouts, and it is possible here that we end up, doing a bigger indecision triangle. It's still August. But a breakout would be getting me interested in buying pullbacks here in silver, and we would be, first target would be back to these highs at 29.12, And then, as you know, I think that this is a bigger bottom. This is an 886. So above this 29, I'm going to zoom out. So this whole swing here, we reversed this 886 fib level. When you do that, your first target is the 50%, which is what we hit. But if you close and hold above the 50%, your second upside target in silver is 40. That's quite nice. So we can say holding above 29 in silver gives us a measured target of 40 and a really nice tradable range. So I'm looking at silver. I think that looks actually a much more interesting trade than gold. Gold is so much talked about, you know, with respect to inflation, and silver might just be the quiet winner. We talked, of course, about the big pattern in uranium. Still like uranium, don't see a clear setup right now though. Let's talk about oil. Let's talk about Brent today on the weekly, because this is quite an interesting pattern going sideways. We reversed at this big 236 fib level. It was a little bit messy, but we did. Whenever you do that, you look to pull back to the moving averages for support, and that's what we've done in a really nice kind of range. This is quite a bullish pattern for oil, and sets us up for a wave 5 higher. So we would be 1, 2, 3, 4, and then we would have a measured target based on this first wave. So yeah, I'm thinking that the oil looks pretty good. So in Brent, we would need to close above 87, and then the next target would be 96. We've said for a long time, if we break out in US crude, that the target's back to 100. Let's go back to the daily of this. This is the in fact, let's go to the weekly first, because we've got exactly the same pattern. Measuring it differently. Look, we're in this descending channel. We've got 2 touches on the top, 3 touches, 4 touches on the bottom. If I put my fibs on, we're bouncing. We've done a 786, 38.2, and this 50% pivot level in the middle is our resistance. And again, if we get above 82.59 in US crude, we have a really nice trade target of 98. So I really do like the look here of how we have pulled back to these weekly moving averages and found support. And it's kind of very similar scale to what I think this wave 2 is in US crude. So I think looking for long opportunities, which we haven't quite got here, or 4-hour pullbacks in crude would be quite interesting. So a pullback here, especially to these like 4-hour moving averages, or at short term, an inverted head and shoulders pattern here in oil at the end of this week or month end would give us a really nice long opportunity. Might not even come back that far. Long opportunity for oil. So as we get into month end, I'm definitely looking for those. I think those are really nice, interesting trade setups with really clear targets. Let's take finally a look at my favorite commodity, Bitcoin. So yesterday we talked about the lovely big, let's take a look at Bitcoin futures. Yesterday we talked about that lovely big move on the ETF news, and we said watch out. Here, when I look at the weekly, we're back at the weekly 200 moving average, which previously has been pretty interesting resistance, then support. We're doing it again. I don't know how this week is going to close, but I think we may have seen a little bit too much irrational exuberance with this move on the ETF news, which isn't really news, it's just a review. However, as we go into the next week, we have got a lot of deadlines for the SEC to update where we are with these ETF applications. Doesn't mean that they've got to approve them by those dates, but they have to give an update of what's going on by these dates. And we can see 2nd of September, 1st, 2nd, and 4th. So within that period, yeah, we are going to hear ETF news within this next week. Maybe the full moon today is the turning point. This is the date by which the SEC has to update. So not necessarily the day it's going to happen, it's got to be by then. So we also know from looking at seasonality for Bitcoin that, pullbacks in August tend to bottom in September. So I feel like there's still good news to come, potentially, but I don't know if it'll be from these ETFs. Okay, I will come back with a stock index update.